Last we discussed up to page 112. Activity 1. Right, we will start the rest of today. Right, then students, under the production cost, okay, under the production cost lesson, we have discussed we discussed an organization, the method of calculating production cost of a product. The method of calculating production cost of a product by a manufacturing business organization. Okay, here we discuss production cost for a manufacturing organization. They manufacture and sell. For a business organization which manufacture and sell. We discuss production cost lesson. And then under this lesson, last year we discussed the method of classifying cost in business organization. The method of classifying cost in business organization. Students, okay, cost in business organization is non-production cost. Non-production cost and production cost. Non-production cost and production cost. Okay, non-production cost means distribution expenses, administration expenses, finance expenses, and other expenses. These are the non-production costs in a business organization. Non-production costs in a business organization. Okay, already you have learned under chapter 4 and chapter 5. Okay, and then production costs. Okay, and then production costs in a manufacturing business organization. Basically, we can divide into two. How to classify direct cost and indirect costs. Okay, one of the name for direct cost is prime cost. Another name is prime cost. Prime cost. Another name for indirect cost is overhead cost. Overhead cost. Okay, overhead cost. And then direct cost move. Okay, change with the manufactured quantity, but indirect cost doesn't change with the manufactured quantity. Okay, normally students, direct cost will increase or decrease. Okay, when the manufacturing quantity will increase, direct cost will increase. When the manufacturing quantity will decrease, direct cost will decrease. But with the manufactured quantity, overhead cost will not be changed. Okay, we assume here as with the manufactured quantity, overhead cost will not be changed. For example, factory rent of the factory will not be changed with the manufactured quantity. Okay, salary payment for the security person in a business organization will not be changed with the manufactured quantity. Okay, right, and then students, last we discussed direct cost. Further, we can divide into three. How to classify direct material, direct labor, direct other costs. Okay, direct cost in a business. Further, we can divide into three: direct material, direct labor, direct other costs. And then indirect cost in a business organization, also further we can divide into three: indirect material, indirect labor, indirect other cost. Indirect other cost. Let's say if the total direct cost, if the total prime cost is 30,000, let's say total prime cost 30,000. Let's say total overhead cost of a business organization 20,000. Total overhead cost. Okay, then prime cost plus overhead cost or direct cost plus overhead cost. The total amount is called production cost. Production cost 30,000 plus 20,000. Production cost how much? 50,000. Production cost 50,000. Okay, these are the things this chapter is discussed. Okay, we need to discuss under this chapter. These are the things. Students, if the prime cost is 30,000, overhead cost is 20,000, then total production cost how much? 50,000. Total production cost 50,000. Then total production cost divided by manufactured quantity. Let's say total manufactured quantity 500. They manufactured 500 quantity, 500 units. Then 50,000 divided by 500 means 100 rupees cost per unit. Per unit cost is how much? 100 rupees. Then to this 100 rupees cost, you need to add profit. You need to add profit. Let's say business organization add 20% to this 100 rupees. If they add 20% to this 100 rupees, then insurance 100 rupees plus 20, 120. Okay, the selling price of the product is 120. These are the things you need to learn under this chapter. Okay, right. Actually, these are not theories. Okay, practical things. Practical things in the business world. Okay, these are not theories. These are not theories. Practical things. Practical things. Okay, using your common sense, you can provide answers for this result. Okay, therefore, don't take it as a theory. This is not a theory. Practical situation. Okay, and total production cost divided by manufactured quantity. Divide by manufactured quantity. Then you can calculate production cost per unit. Then to that production cost, you need to add profit. You return profit. Then you can calculate selling price of the product. Selling price of the product. Okay, right, right, right. Then students, lastly we discuss uh, direct material, direct labor, direct other costs. Okay, definitions given in the textbook we discussed last day. Direct material means physical resources that we use to manufacture product. Okay, and then direct labor. Okay, labor's contribution to manufacture product. Okay, direct labor. Okay, another payment for the employees who are directly involved in the manufacturing process. Okay, direct labor, and then direct other costs. Right, on the direct other costs we discuss one of the example royalty fee, payment of royalty. Okay, and then indirect material, indirect labor, indirect other costs. Lastly, we discuss matters given in the textbook. Okay, regarding direct labor material, direct labor, direct other costs, and indirect costs. Right, then activity 3 we have discussed last day. In page number 111, in page number 111, last chapter we discussed last day. Sorry, last paragraph. In page number 111, under the last paragraph, what we need to know, page number 111, last para. Here, this last para discuss the classification of production costs into direct and indirect may depend on the decision of the management of the organization. Students, whether it is direct cost or indirect cost, depend on the decision of the management. Decision of the management. Right. Right. Then we will discuss activity 3, page 112. Ramesh, did we discuss activity 3, page 112? Activity 3?
No, sir.
Oh, right. We'll discuss activity 3. Students, look at the activity 3. Following are the costs relating to a specific month of Rasami with a specific month of Rasami with a sesame roll, Halakarali, manufacturing company. Following are the costs relating to a specific month of Rasami with a sesame roll, manufacturing company. Calculate the prime cost and overhead cost using the above information. Using the given information, you need to calculate prime cost and overhead cost of this business organization. Prime cost and overhead cost. Right. Quickly, we will complete this question. Right. Quickly complete this question. Students, write down page number 112, activity 3. Page number 112, activity. Page 112, activity 3. Activity 3. Right. You need to classify this cost information to prime cost or overhead cost. Prime cost or overhead cost. Here I will write down prime cost. And then here I will write down overhead cost. Overhead cost. Prime cost or overhead cost. Okay, prime cost or overhead cost. Right. Shall we start? Insurance, a material cost 80,000. Material cost, prime cost, overhead cost. Material cost, Akshaya. Akshaya, material cost, prime cost, overhead cost. Austin, material cost 80,000, prime cost, overhead cost. Ramisha, material cost 80,000, prime cost, overhead cost.
Prime cost, sir.
Prime cost, prime cost. I prime cost, sorry, not material cost. Akshay, can you hear me? Austin, can you hear me, Austin?
Yes, sir.
Yes, sir. Akshay, can you hear me, Akshay? Right. And then student labor cost. How to classify labor cost? Labor cost, Hasilu, labor cost. Oshmi, Oshmi, labor cost 20,000. Shaima, next Shaima, labor cost 20,000.
Prime cost.
Prime cost. Okay, labor cost will categorize under prime cost. Write down labor cost. Labor cost under prime cost 20,000. Labor cost 20,000 under prime cost. And then packing cost. How to classify packing cost? Lagdil, packing cost.
Prime cost.
Yes, we will categorize prime cost, packing cost and prime cost. Packing cost. Write down packing cost. Packing cost 4,000 under prime cost. And then factory rent. How to classify factory rent? Factory rent. Austin. Sanjali, factory rent. Sanjali.
Overhead cost.
Yes, and overhead cost, indirect cost. Right here, factory rent under overhead cost. Rent 11,000. Indirect other expenses. Right. Next one. Salaries to watchman. Salaries to watchman means salary payment to security person. Salaries to watchman 7,000. How to classify? How to classify? Oshmi.
Prime cost.
No. Salaries to watchman, salary payment to security will not be changed with the manufactured quantity. Therefore, it is better to categorize under overhead costs. Overhead costs. Okay. Salary to watchman. 7,000. Expenses for flavors. Students, how to classify expenses for flavors? Shaima. Expenses for flavors.
Overhead cost.
Anyone else? Yes, overhead cost. Then what about flavors cost? Akshaya, can you give me Akshaya? How to classify flavors cost? Akshaya. Ramesha, flavors cost.
Prime cost.
Flavors. Yes. We can classify flavors by the cost of flavors for high cost or overhead cost, but that is depend on the decision of the management. That is depend on the decision of the management. Insurance in activity one. In activity one, you can see in the shoe manufacturing business organization, nail and polish. Nail and polish. Nail and polish has been categorized under overhead cost. Indirect material, nail and polish. Nail and polish. Okay, right now. Here shows in the active one, you can see nail and polish. And then look at this nail and polish in page number 116. In page number 116, the syllabus has categorized nail and polish under indirect material, nail and polish. Indirect material. Therefore, it is better to classify. Therefore, it is better to classify nail and polish. Expenses of flavors under overhead cost. Okay, under overhead cost. Right. Write down. Expenses of flavors. Flavors cost cost of 500. Overhead cost, overhead cost. Right, and the next one. Electricity expense. How to classify electricity expense? Electricity. Plug the electricity.
Indirect,
Yes,
overhead.
indirect cost. Electricity cost, indirect cost 1,500. Yes. And then Hasidu, maintenance of machinery. How to classify Hasidu?
Prime cost.
Maintenance of machinery, costing.
Prime cost.
No. Maintenance of machinery
Overhead cost.
we qualify under overhead cost. Okay, right. Overhead cost, indirect cost. Indirect cost. Okay, Lama, here we assume maintenance cost is not changed with the manufactured quantity. Okay, machine maintenance cost will not be changed with the manufactured quantity. We assume like that. We assume like that. Therefore, record maintenance of machinery under overhead cost. Maintenance of machinery under overhead cost 5,000. Right, 5,000. And then students quickly calculate total prime cost of the organization. Quickly calculate total overhead cost of the organization. How much the total prime cost? How much the total overhead cost? Here, 104,000 total prime cost. Total prime cost of the business organization. How much? 104,000. 104,000. And then total overhead cost. How much? Total overhead cost. How much? 26,000. Is it correct? Total overhead cost 26,000. Correct or wrong? Yes or no?
Correct, sir.
Correct, right. 26,000 total overhead cost. Ah. Akshay, can you hear me now? Akshay. Right. Right. Then the students, in page number 112, under the activity 3, total prime cost of the business organization, how much? 104,000. Total overhead cost of the organization, how much? 26,000. Total overhead cost. Okay, total overhead cost, right. And then, in page number 113, you can see the method of calculating selling price per unit. Already we have discussed. Okay, in page number 130, you can see the method of calculating selling price of a product. Okay, students, and then here, go to page number 113. In page number 130, you can see okay, here. Right. Calculation of production cost of business here. Calculation of production cost here. Total production cost, prime cost plus production overhead cost, prime cost plus production overhead cost, and then per unit production cost. How to calculate per unit production cost? Total production cost divided by number of units produced, manufactured, and then profit margin. You need to add some amount as profit margin here. Per unit selling price equal per unit cost plus per unit profit margin, cost plus profit margin. And then here you can see one of the example. Lamai, here in page number 114 and 115, you can see one of the example. Okay, right. Then here, right. Then students, go to page number 114, first para. Go to page number 114, first para at first here. Okay, at first, and then here you can see. Here you can see when a manufacturing organization at a certain profit margin to its cost to decide on the product price, it is called cost-based pricing. Students, when a business organization add certain profit margin to the cost of the product. For example, let's say production cost of a product is 1,000. Production cost of a product is 1,000. Then to this 1,000, business organization add 20%. Business organization add 20% as profit. Then students, production cost 1,000, profit 200, selling price how much? Selling price 1,200, selling price 1,200. This is called cost-based pricing. To the cost, business organization add certain percentage as profit. Okay, to the cost, business organization add certain percentage as profit. Cost-based pricing. Cost-based pricing. For example, price of the corona vaccine. Okay, price of the corona vaccine. Okay, when drugs manufacturing business organization manufactured corona vaccine, to the cost they add a profit percentage. Why? There is no available market price for corona vaccine. Therefore, they added a profit percentage to the cost of the product. They added profit percentage to the cost of the product. Okay, then that is called cost-based pricing. That is called what? Cost-based pricing. But there are some business organization. They decide the selling price of the product by considering various factors, not only cost. Okay, if the manufactured product is a new product to the market, then they can add profit percentage to the cost of the product. But for some of the products, okay, manufacturing business organization, but to decide the selling price of some of the product, manufacturing business organization decide manufacturing business organization focus on some of the other factors other than cost. Okay, without considering only the cost. Some of the manufacturing organization consider other factors. What are they? In page number 114, you can see. In page number 114, you can see other factors considered by a manufacturing organization when deciding market price. Other factors. Here, look at this para. Second para, page number 114. Even though the prime factor in making a pricing decision is cost, there are other factors that should be considered in making pricing decisions. Other Other factors that a business organization need to consider when they deciding price of the product. What are the other factors? Here, the demand for the production in the market. Okay, demand. By considering the demand for the product, manufacturing business organization set the market price based on the demand. For example, current vegetable price. There's a high demand, but supply is low. Currently, for vegetable students, supply is low. Supply low. Supply low, but demand is high. But demand is high. Therefore, depending on the demand in the market, okay, vegetable suppliers decide the price based on the demand in the market. High demand but low supply. Okay, then based on the demand in the market, they have decided the price of the product, price of vegetables in Sri Lanka. The demand for the product in the market. Okay, other factors that we need to consider. At first, we need to focus on demand for the product. And the second one, the prices of the similar products and substitute in the market. Okay, when Munchie Biscuit Company deciding the market price of their products, they need to focus on the prices of Melbourne Company. They compare Melbourne Company prices. Okay, the prices of similar products. For Munchie Biscuit, Melbourne Company manufacture similar products. Therefore, they need to focus prices of similar products. When Munchie Company deciding market price, they need to focus on prices of similar products. Similar products manufactured by Melbourne Company. And then substitute product. Okay, prices of substitute products also we need to consider. Substitute product. For example, for substitute product, for tea, we can use coffee, substitute product. Instead of using coffee, we can use tea. We can use coffee or milk, substitute product for tea. When a business organization deciding market price, they need to consider prices of substitute product as well. Prices of substitute product as well. And the third one, pricing policy of the organization. Some of the business organization provide product at a higher price. That is their policy. But some of the business organization trying to provide their product at a lower price. That is the pricing policy of the organization. That's the pricing policy of the organization. So some of the business focus on the pricing policy of the organization. Okay, and then fourth on legal factors. You need to focus on legal factors. For example, Electrogas company and Laugh Gas company cannot increase prices of product. Cannot increase gas prices. Why? There's a government restriction. Okay, government control. Sri Lankan government control prices of gas. Sri Lankan government control prices of fuel. Therefore, you need to focus legal factors. Okay, when you're deciding prices of your product. Prices of your product. Okay, normally a business organization set their prices of product based on cost. So the cost they are profit. But you need to focus on other factors as well. Okay, what are other factors? The demand for the product, the prices of the similar products and substitute product, pricing policy of the organization, legal factors. Other factors need to be focused, need to be concerned by manufacturing organizations. Okay, right. Then students, please highlight other factors that should be considered in making pricing decisions. Examiner may ask you to write down 2 factors considered by business organization when they're deciding the market price. Now, I please highlight other factors that should be considered in making pricing decision. Other factors. Please highlight other factors that should be considered in making pricing decisions, and then please highlight demand for the product, and then highlight prices of similar products and substitutes, and then pricing policy of the organization, and then legal factors. Please highlight. Please highlight demand for the product, prices of similar products and substitute, pricing policy of the organization, and then legal factors. Please highlight. Sometimes examiner may ask you to write down 2 factors that should be considered when you deciding prices of your product. Is it clear? Akshay, is it clear, Akshay?
Yes, sir.
Yes, right. Ravisha, clear, Ravisha?
Yes, sir.
Right. Austin, clear, Austin?
Yes, sir.
Yes, right. And then in page number 114, you can see one of the example. Here. Look at the example. Prime cost of a business 120,000. Production overhead cost is 80,000. Number of units produced 200. Profit margin on total cost per unit is 10%. Then here, prime cost plus production cost, total production cost 200,000. And then total production cost divided by manufactured quantity, then 200,000 divided by 200, then cost of the product is 1,000 rupees. Cost of the product is 1,000 rupees. And then per selling price 1,000 plus 10%. Okay, 1,000 plus 1,000 into 10%, it means 100 rupees. Then insurance selling price of the product is how much? 1,100. Okay, simple. Okay. Here there is no any logic. Am I using your common sense? Okay, you can provide the answer for this type of questions. Right. And then in page number 116, you can see the method of preparing production cost statement. Students, production cost of a business organization we can present as a statement. So then this is one of the example for the production cost statement. Production cost statement here. Look at this table. Prana Mayura Furniture Manufacturers production cost statement for the month of December 2023. Then prime costs, direct material, wood, direct labor, labor cost of carpenters, other direct expenses, other direct cost 15,000. Then total prime cost of the business how much? 175,000. Total prime cost of the business is how much? 175,000. And then production costs, production overhead costs, indirect material, nail and polish, indirect labor, supervisor remuneration, supervisor salary, indirect other expenses, factory rent, fuel and electricity, factory insurance, machine depreciation. And then insurance here, total production cost of the business how much? 75,000. And then 175,000 plus 75,000, 250,000 total production costs. Total production cost of the business how much? 250,000. This is called production cost statement. This is called production cost statement. Okay, students, when you providing answer for a production cost statement, you need to clearly classify direct material. Okay, direct material, direct labor, direct other expenses. You need to properly classify. Okay, if examiner has given a direct material, at first you need to write down direct material and then you need to write down wood. But you should be able to properly classify expenses, whether it is direct or indirect. Okay, right. Right. Right now we will move into page number 117, activity 4. Page number 117, activity 4. Right. Students, write down on your book, page number 117, activity 4. Patient 117 and 24. Fine. Shall we start? Shama, shall we start? Shaima.
Yes, sir.
Is that right? Here, look at that 24. List the benefit of list the benefit that the manufacturing organization can achieve by preparing the production cost statement. By preparing production cost statement, some of the benefits obtained by a business organization. Lamai, what are the benefits? Can you give me one benefit? One of the benefit of preparing production cost statement. Austin, one of the benefit, Austin. Hasidu, one of the benefit. Prakdeep, Ashmi, Hamisha, one of the benefit of preparing a production cost statement.
Can decide the price of the object easily.
Yes, very good. Yes, yes. Okay, write down first one. To decide the price of the product. Write down, write down. Very good. Okay, first answer is first one is write down first answer for the question number 1. List the benefit that the manufacturing organization can achieve by preparing the production statement. To decide the market price or to calculate the production cost of a unit. Okay, write down. To calculate the production cost of a product. To calculate the production cost of a product and to decide the market price. To calculate the production cost of a product and to decide market price. To decide market price. Right, and then another example. Sorry, another answer. Another benefit of preparing production cost statement. Another benefit. Write down. To identify different type of cost. To identify different type of cost. Write down. To identify different type of cost. Second one, write down. To identify different type of cost. Third one, write down. Third one, write down. To control and manage production cost. 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 Another one. To take decisions. Sorry. Yes. To take decisions. To take management decisions. Right. To take management decisions. To take management decisions. to take management decisions. Okay, right. Here is a benefit of preparing production cost statement for a business organization. Right. Look at the question given here. Second question here. Look at the question. Following are the costs relevant for PSR roofing tile Private Limited, a roof tile manufacturing company for the month. Manufacturing company for the month. Yeah, write down for the month of January. Yeah, for the month of January. Or company for the January month. Okay. Roofing tile manufacturing company for the month of January 2023. For the month of January 2023. Okay, for the month, it should be for the month. And then these are the expenses, cost information. And then here you can see the company has produced 100,000 units of roofing tile and hopes to earn a 10% of profit margin on a roofing tile. Prepare the statement of production cost for the month of January 2023, including the following information for the PSR roofing tile private limited. You need to prepare production cost statement including this information. What are the required information? You should you need to calculate prime cost, production overhead cost, total production cost, and then you need to show per unit selling price. You need to show per unit selling price. Okay, right. Now I will prepare production cost statement. Production cost statement. Right. Quickly draw a production cost statement. Page number 117, activity 4. Page 117, activity 4. Page 117, activity 4. Here, business is what? PSR roofing tile. And down here, PSR roofing tile. PSR roofing tile. And then production cost statement for the month of January 2023. Write down production cost. Production cost statement for the month of January 2023. Write down PSR roofing tile production cost statement for the month of January 2023. And then here write down prime cost. Prime cost. Under prime cost, direct material. Leave 2 lines and then direct labor. At least leave 2 lines and then other direct. And then here overhead cost. Indirect material. Indirect labor. Indirect other. Indirect other. Students, quickly draw this production cost statement. Quickly draw this one. Huh? am I in the exam under direct material, under direct labor, under direct other costs, you should be able to properly classify given information. Okay, you should be able to properly classify given information into these points. Okay, you can't just write down material costs under prime cost. Before writing material, you need to write down the direct material at first, and then you can write down material purchase cost. Okay, right. Like this, Shalisha's question, like this.
Okay, sir.
Okay, right. Then here, look at the question. These are the information for the month of January 2023. Material purchases 353,500. Material purchase cost. Here write down material purchase cost. Material purchase cost 353,500. Material purchase cost 353,500. Material purchase cost. Okay, direct material. Direct material. And then production labor cost. How to classify production labor cost? Hamisha. How to classify production labor cost?
Direct labor cost.
Yes, under direct labor cost. Under direct labor, here in front of direct labor, write down production labor cost. Production labor cost. Production labor cost 85,000. Production labor cost 85,000. And then supervisor salary. Supervisor salary. How to classify supervisor salary? Shaima. Supervisor salary.
Indirect labor cost.
Yes, under indirect labor cost. Here, write down supervisor salary. Supervisor salary, indirect labor cost 14,000. Supervisor salary, indirect labor cost 14,000. Supervisor salary. And then factory electricity. How to classify factory electricity? Okida. Yes, Okida. How to classify factory electricity?
Other direct.
Yes, other direct expenses. Other direct expenses, indirect other. Sorry, factory electricity, indirect other. Indirect other, factory electricity, indirect other, and here electricity. Electricity, 12,000. Indirect other expenses. Indirect other expenses. And then cost of paint. Painting cost. How to classify painting cost? Cost of painting.
Other direct.
Yes. Painting cost. Painting cost direct or indirect? Painting cost.
Direct.
Akshay, painting cost, cost of paint, 5,000.
Indirect.
Yes. It is better to classify here. PS roofing tile business name. We will categorize cost of paint under indirect material. Indirect material. Okay, practically cost of paint we can identify with the manufactured quantity, but here we will classify cost of paint under indirect material. Indirect material. Okay. Here, cost of paint. Cost of paint, indirect material 5,000. Indirect material. Right, and the next one, direct other costs. Direct other costs. Some here they have given direct other costs directly. Direct other costs. Direct other costs 10,000. Direct other cost 10,000. And then salaries for security service. How to classify? Salaries for security service. Indirect labor. Indirect labor. Salary of security. Find out salary of security 20,000. Indirect labor. Indirect labor. Indirect labor. Right. Machinery depreciation. How to classify? Sonal. Machinery depreciation. How to classify? Sonal. Akshay. Machinery depreciation.
Other indirect costs.
Yes. Indirect other. Indirect other. Machine depreciation. Machine depreciation. Indirect other 7,000. 7,000. 7,000. And then factory insurance. Factory insurance 3,000. Factory insurance 3,000. How to classify? Hasidu. Factory insurance 3,000. Austin. Factory insurance.
Sir, other direct.
Yes, other direct, not direct other. Sorry, not other direct, indirect other. Indirect other. Factory insurance. Factory insurance will not be changed with the manufactured quantity. Therefore, indirect other, not direct, indirect other. Factory insurance. Factory insurance, indirect other, 3,000. Right. 3,000. And the next one, factory maintenance cost. How to classify? Factory maintenance cost. Sign off. Factory maintenance cost.
Other indirect.
Yes. Other indirect. Indirect other. Indirect other. Factory maintenance. Factory maintenance, indirect other 5,000. Factory maintenance, indirect other 5,000. Right, done, finish. Right, now I quickly calculate prime cost of the business, quickly calculate indirect cost of the business. How much? How much the total prime cost? How much the total indirect cost? Prime cost and overhead cost.
Sir, 448,500.
It is total amount of prime cost. Is it prime cost? Yes, prime cost, right? Right. Then total overhead cost, how much? Total overhead cost?
Sir, 100,000.
100,000. 100,000, eh? Yes, 100,000. Is it correct? Amisha, total overhead cost and 100,000. Is it correct?
Yes, sir.
Right. Then total production cost. Total production cost of the business how much? Total production cost.
548,500.
Yes, 540, 500 total production cost. Total production cost 548, 500. Total production cost 548, 400. Total production cost. Total production cost 548, 400. Okay, right. Right. And then here question asks you to calculate prime cost. Right, prime cost 448, 500. Production overhead cost 100,000 and total production cost 548, 500. Total production cost. And then fourth one, per unit selling price. You need to calculate per unit selling price. Right, then before calculating per unit selling price, you need to calculate what? You need to calculate cost per unit, unit cost. Then to the unit cost, you can add profit margin. To the unit cost, you can add profit margin. So then students, at first calculate the cost per unit cost. Here, cost per unit. How much? Production cost divided by manufactured quantity. Production cost divided by manufactured quantity. Manufactured quantity how much? Here manufactured quantity is 100,000. Okay, number of units manufactured 100,000. Then here 548, 500 divided by manufactured quantity. How many quantity? 100,000. 100,000 quantity. 100,000 quantity. So then cost per unit how much? 5.485. Cost per unit. Is it clear? Cost per unit 5.485. Is it clear?
Yes, sir.
Yes, right. Okira, Oshmin, Oshmin, is it clear, Oshmin? Austin, clear, Austin? Sonal, okay, Sonal. Akshaya, okay, Akshaya?
Okay, sir.
Right. Shaima?
Yes, sir.
Yes, right. And then here, 100,000 units and of roofing tile and hopes to earn 10% of profit margin on a roofing tile. Lamai, profit margin is 10%. Then to this cost per unit, you need to add profit margin to calculate selling price. To calculate selling price. Then here, selling price equal 5.485 plus 5.485 into 10%. Right. Cost plus profit. Profit 5.485 into 10%. Then 5.485 plus here 10% means how much? 0.548. 0.548. 0.548. Actually 0.5485. 0.5485. Then selling price. How much is the selling price? How much is the selling price? How much is the selling price? We'll take 3 decimals, 3 decimals, 3 decimals, huh? 6.33 rupees. Selling price per unit. Selling price per unit 6.333. 6.033. 6.033. Right, Lamai, do you have any doubt? Austin, do you have any doubt? Hasilu, is there any doubt, Hasilu? Lagdil, do you have any doubt?
No, sir.
No, right. Okira, Oshmi, any doubt? Pramesha, do you have any doubt, Pramesha? Sanjali?
No, sir.
Not right. Sanjali, Shaima, is there any doubt? Shaima.
No, sir.
All right. Akshaya,
No, sir.
right. Sonal, Sonal, do you have any doubt? Sonal.
Yes, sir.
Not right. Right. Then we'll discuss activity 6. I will give you 10 minutes. Try to complete activity 6 within 10 minutes. Lamaya, shall I do question number 5 at first? Activity 5. You can give me answers for this question number 5. For question number 5. Look at this one at first. Classify the below given cost of a shoe manufacturing company into element of production cost. Into element of production cost. Cost of leather and thread. Cost of leather and thread. What is the element of production cost? Cost of leather and thread. Shaima?
Direct material?
Yes, very good. Direct material. Direct material. Second one. Write down in front of this one. DM. Direct material. And next one. Salaries for shoemaker. Salaries for shoemaker. Ramisha.
Indirect labor,
Salaries for shoemaker.
direct labor,
Direct labor. Factory rent. Lagdil.
Indirect other.
Yes, indirect other. Royalty charge of 20 per shoe paid for shoe design. Royalty payment. Royalty charge payment. 20 per shoe. Then how to classify? Hasidu. Akshaya.
Other direct costs?
Yes, other direct costs. Direct other. Salaries of factory watchman. Sonal. Salaries of factory watchman. Sonal. Austin. Salary of factory watchman. Austin. Shaima.
Indirect labor.
Yes, indirect labor. Indirect labor. And then cost of adhesives. Adhesives means glue used to right there. Used in manufacturing shoe. Glue. Cost of adhesives. 6 ton. Lakdil.
Indirect material.
Yes, indirect material. Better to classify under indirect material. Right. Right. Then it says I will give you 10 minutes. Try to complete activity 6 within 10 minutes. Try to complete activity 6 within 10 minutes. You need to focus on period. Period here for the month of November. You need to prepare production cost statement for the month of November. For the month of November. And then here you can see sewing machine depreciation rate is 12% annually. Okay, depreciation you need to calculate for the month of November. For the month of November. I will give you 10 minutes. Try to complete this question within 10 minutes.
Sir,
Yes.
sir, here should we add the value of the sewing machines to the statement?
No. Fixed assets we can't add. Here 500,000 means fixed asset. So the sewing machine means fixed asset. We can't add fixed asset cost to production cost. But the depreciation we need to add. Depreciation. Depreciation of sewing machine. Okay, 500,000 into 12%. But and then you need to calculate monthly depreciation. Number one depreciation. Then that amount you can add to production cost. Okay, Ramisha.
Okay. Okay, sir.
Okay. Quickly complete question number 6 within 10 minutes. Amisha, did you complete the question? Amisha. Akshaya, did you complete the question?
Yes, sir.
Right. Send me the answer, Akshaya. Shaima, did you complete the answer? Quickly send me the answer. Sonal, did you complete? All right. Total production cost हमें 99,000. Okira. Ashwini. Ashmi, did you complete the question? Lagdil, finish or Lagdil?
Finish. I will send.
Sonal, finish or Sonal?
$144,000, sir.
Yes. That's right. Right. Quickly, we'll discuss a question here. Given below are the cost information related to apparel business Navalia for the month of November 2023. Right. Then here, students, when I ask you to send me answers, you need to send me answers, huh? You need to send me answers. You need to send me answers. You need to give me answers. If not, I will have to remove you from the group, huh? Question එක දානකොට මට ටක් ගාලා මම question එක අහන්න මට answers දෙන්න ඕනේ නැත්නම් මම අයින් කරලා දානවා group එකේ. මට class fees එක වැඩක් නැහැ වැඩ කරන්න නැත්නම් මම අයින් කරලා දානවා. මම class fees එක base කරලා online කරනවා නෙවෙයි. අයින් කරලා දානවා හින්දා අනිවාර්යයෙන්ම මම question එක ගහුවොත් මට answers එන්න ඕනේ. හරි මෙන්න බලන්න. Given below are the cost information related to apparel business summary for the month of November 2023. Material purchase 64,000. Direct material cost. Direct material. Material purchase. Material purchase. Direct material 64,000. 64,000 direct material. And the next one, salary of machine operator. Salary of machine operator. Direct labor. Direct labor. Salary of machine operator. Salary of machine operator 20,000. 20,000 direct labor. Salary of machine operator 20,000 direct labor. Wages for the supervisor 23,000. Now my wages for the supervisor, how to classify it? Indirect labor. Indirect labor. Supervisor salary. Supervisor salary 23,000. Indirect labor. Supervisor salary, indirect labor. Salary of the postman 12,000. Security salary. Salary of security. Salary of postman 12,000. Salary of postman, indirect labor. Repair of sewing machine 8,500. Indirect other. Indirect other. Repair for sewing machine. Indirect other 8,500. Indirect other 8,500. And then fuel for factory. Factory fuel. Fuel for factory. Indirect other. Indirect other. 1,500. Now, fuel of the factory, sometimes we can classify under indirect material also. Sometimes you may classify fuel for factory under indirect material. It is also correct, but in your syllabus, fuel expenses has been categorized under indirect other. Therefore, we will record fuel expenses under indirect other. Rent for the factory building, rent expense, how to classify? Indirect other, rent expense. Rent expense, indirect other 7,500. Indirect other, rent expense. Electricity costs, how to classify? Indirect other, electricity costs. Electricity costs 2,500, indirect other. Okay, indirect other. And then value of the survey machine. Value of the survey machine fixed asset. 500,000 machine value. We can't record machine value on the production cost statement. In the production cost statement, we can write down machine value. Only the machine depreciation. But we can record only the machine depreciation. Here, look at the question. The apparel production for the month of November 100 units, and company keep a profit margin of 15% from each unit. All the material purchase have been fully utilized. The sewing machines are depreciated at 12% annually. Sewing machine depreciate 12% annually. Then monthly depreciation expense, you need to charge to production cost statement. Monthly depreciation. Here, sewing machine value is 500,000. Annual depreciation rate is 12%. Annual depreciation rate 12%. And then 12% into 1 over 12. Yes, 1 over 12. 1 over 12. Then how much? 5,000. 5,000. Depreciation expense of the month is 5,000. Then here, indirect other. Machine depreciation 5,000. Machine depreciation 5,000. Again, students, total direct cost how much? 84,000. Total direct cost 84,000. Yes, yes, 84,000. Total indirect cost how much? Total indirect cost how much? How about the total indirect cost? 60,000. Is it correct? Total indirect cost 60,000. Yes or no? Total indirect cost 60,000 or not? Yes or no? Total indirect cost? Yes, 60,000. Yes, yes. Right. Then students, direct cost plus indirect cost total amount how much? 144,000. Total production cost. Total production cost 144,000. Total production cost 154,000. 144,000. Right. This is the answer for the question. Here, question asks you to calculate. Question asks you to prepare production cost statement only. Production cost statement only. But if you want to calculate the here, it's needed. Upper production businesses. All the money. Like prepare production cost statement for the month of November. Yes, this is the production cost statement. And if you want to calculate the selling price per unit, you can calculate. Okay, if you want to calculate the selling price per unit, you can calculate. First, you need to calculate cost per unit. Then, to the cost per unit, you need to add profit margin. Profit margin 15%. Okay, to the cost per unit, you need to add 15% profit. Then you can calculate selling price of the product. Selling price of the product. Okay, right. Right. Austin, is it clear, Austin?
Clear.
Right, Hasidu, question is clear or not, Hasidu?
Yes.
Clear, right? What about Lagdi? Is it clear, Lagdi?
Clear, sir.
Clear, right? Okira. Okira means Okira or Oshmi. Clear or not? Sonal, question is clear or not, Sonal?
Yes, sir.
Yes, right. Ramisha, is it clear?
Clear, sir.
Clear, right? What about Sanjali? Shaima, clear or not? Shaima.
Yes, sir.
It's right. Akshaya,
Clear, sir.
clear, right? Right. Adilamai, in your textbook, page number 119 and 120 discuss the method of preparing production cost statement using spreadsheet. Spreadsheet means Excel sheet. Okay, using an Excel sheet, you can prepare this production cost statement. Okay, using an Excel sheet, you can prepare production cost statement. And then okay, right? But that will not be tested from you in the exam because you don't have an Excel sheet in the exam. I think for the understanding purpose, they have given the method of preparing production cost statement using an Excel sheet. Okay, using this kind of Excel sheet, we can prepare. Okay, we can prepare production cost statement. Right. 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 Then students, that is the end of chapter 7. That is the end of chapter 7. And then next day we will discuss last session, chapter 8, investment. And then after completing chapter 8, syllabus is over. And then we can start papers. Papers plus revision. Papers plus revision. Every day we will revise knowledge of one of the lesson. And then we will discuss paper. Okay, we'll discuss papers. We'll try to discuss at least 20-25 papers. Okay, during balance 4 months. Okay, January to April, we'll try to discuss at least 20-25 papers. Okay, including past papers. Then you will not have any issue regarding the common subject. Okay, right. Then we'll finish for the day. And then my target is to do another class on next week. Okay, after Christmas, we'll try to do one class. Because in my physical classes, my physical classes are not conducting in last week, but I can do online classes. Okay, next 28th we will do the class. Okay, for the absent students, recording, yes, recording is available. Therefore, next Thursday we will do the class. Right. Then we can complete the lesson. Sorry, then we can complete the syllabus. Whole syllabus. Right. Then we will stop for the day. Right. Good night.
Thank you, sir. Good